Okay, quick Monday morning radar update. So we got a few reversals in the market, in the US markets last week. Let me just, we've had a bit of a pop on the open, and we're just drifting down towards pivots in Europe today. No US today, but it's going to be interesting how this plays out over today towards the US Open tomorrow. But just pretty normal action in the US. It's nice to see the Russell start to actually. The Russell is the market in the US. What's the most interesting at the moment, and still in a base. Big point here. I want to get across, and let's just go to the Nasdaq. I suppose if you follow social media, people have been saying, the rally of 2023 and basically all that kind of, you've missed it kind of stuff. One market, one sector, it does not make a bull market, does it? One stock does not make a trend. One market does not make a bull market. In UK stocks, I ran the numbers a few times, didn't I? I don't know if I've still there's less than 20% of stocks up up compared to the previous high. I think it was 16% of UK stocks were positive since the previous high in the market at the end of 21. And basically UK stocks have been trending down for 2 years. Nobody has missed anything. There's been a little bit of activity in the tech stocks in the US, and there was no surprise to that. We at my side, we talked about that. Tech will lead, but still, we have not got a broad market rally. The indices going back to highs on kicking out bad stocks and bringing in good stocks and weightings. Bull markets do not just go for a few months, do they? Or a quarter. So, we're just not there, and we're certainly not there in UK stocks. They're all in a downtrend. So, banging the drum, repeating myself as always, but it is what it is. Nobody has missed anything in UK stocks. There's pockets of growth stocks. We know what they are. It's really easy to find which stocks are in play and which are rising. And even some stocks what have got pretty good forward earnings, they're still, it's like swimming in treacle, because what tends to sort of happen sometimes is the market isn't ready to move up, and all the time the market's going sideways. Those stocks with fantastic forward earnings what just aren't really racing off and on a bull market style trending run. They kind of, they're structurally okay, but they're not making those big gains we come to the AIM market especially for. And then you can go through the next, you can go through the prelims. You're into the next earnings cycle, and a stock with a lot of gas in the tank has basically melted highest, but not really, it's not really exploded in the way what we come, what we ride trends for. So, that is it. The market's just not ready yet. And I'll just, I know I'm you might say, hey, you've been talking about this for ages. Well, I've been talking about this for over a year and a half now. It's you don't know how the market's going to bottom. It's Groundhog Day every day, isn't it? But we had a target for where the market would bottom, a very obvious one, and we got it to the exact day. But guess what? That's not in UK stocks and the area I like to sort of ride trends in, the more aggressive sort of AIM market. And the scenario is, when the market was coming off the lows and we loaded up back in 2020, I didn't think the market was going to go straight back to highs and go off on a big trending run, but I do know that I have to take my setups, and when the market pulls me into the market, I have to take those trades. And go and have a look at Ergomed from back then. Ergomed's been bought out today, and it's one of those. It's just a scratch trade for anyone who's bought Ergomed, because it's up 20 odd 30%, say, and it's a scratch trade or a get out of jail free. And we don't trade stocks. We don't try and capture. Yeah, we don't trade more risky stocks for little pops in price action. It's better off to trade the less risky stocks for the small moves. In my view, in my opinion, tighter spreads in less risky stocks. I trade them to try and capture a big trend, and that's what we did in Ergo. And there was, say, 700% available move in two trending runs on Ergo, and then today you get, the stock gets a bid, and that's not what we. Every time a stock in my portfolio gets bought out, I just go, oh, it's not going to be that big trend. I just get that. It's a short-term hit of sugar, is basically what I'm trying to say. It's it's not going to sustain you very long, is it, on little buyouts? Anyway, so always stepping up to the markets. I didn't expect the market to do that, but I always step up in that positive way, and I run my risk. And when the market started to turn higher and the risk model let me take more stocks, I loaded into the trends what started to work. And we've got some trends what are starting to work. I know I'm looking at the S&P here, but it's a pocket of strength. The market is not the stocks. It's a market of stocks, but obviously, but the same stocks what basically get crushed on the way down, and not the same stocks what lead the market higher. New stocks and emerge, don't they? And rotation happens. So yeah, it's a little bit grindy out there, and I think the most interesting markets are the transports. I think it could come in a little bit more, but we'll take whatever. And I like to look at the Russell at the moment, because it's in a base and it hasn't broken out yet. It's just gone sideways for over a year. But my big point here is the market's been going down for 2 years in Europe, and that's probably longer than the two. I think it's longer than the 2000, and put the 250 up here. The credit crunch, we basically, we've been going down for as long as the market went down in the credit crunch, if you look. So go figure. Anyway, moving on from that, let's just quickly have a look. US market's been closed today, and we talk about holiday reversals quite often. You can get like a little bit of an odd, you know, correlations and breakdown, and a little bit of odd movement. We're hoping TLT can hold these areas. If it spiked lower, and even if some of the markets went lower, if the S&P and the Nasdaq did a really hard retrace but held the lows, a lot of the other markets would still go lower. Is what I'm trying to say. The weaker markets would go lower, and even if the S&P and worst case scenario, is going to be, it's just going to be, you've got a little bit more time digesting here. Happy days. But if the markets did the worst case scenario, it just sets the market up even better. And we've been saying that for months as well. If the market did have another washout and another move, it's the mother of all opportunities going forward for anyone in the market, isn't it? Especially those who've got risk management, and you can't. You've got to have a way to sell if you want to buy back at better prices, haven't you? So yeah, we've got a tick down in the TLT. Is that a holiday reversal? We've got US dollar. We talked about this leveling US dollar, and it broke higher, and it dipped back in, then it's gone back up again. We've seen a few oilers today. Is that a holiday reversal? We will see. And also we like to have a look at USD as well. You know, USD. Hold on a minute. I've just looked at USD oil. Sorry. This is Brent. You know, it's bumped through this level on Friday, hasn't it? And it's there's a few oilers in the charts today, and US oil also bumped through that level as well. So yeah, you know, correlations breaking down, Holdy reversals. Yeah, for me, we just cruise on into into the US market open tomorrow, and we see where they want to take it really. And I'll just jump onto Ergo and just basically, you know, it's done nothing. I sold over here in a couple of pieces. We rode this leg, and a lot of people at my site rode that leg as well. I didn't ride that myself, but yeah, fantastic. You know, take the log scale off. This is what you want to turn up to the AIM market for, to ride a trend. This you know, stocks getting bought out is just a short hit of sugar, and it's kind of sad to see it go. But in reality, you know, the big re-rate in the move was the one we traded, and we should be looking for the next big re-rating stock as well. So just a few thoughts there on you know, the way I see the markets there. Rinse and repeat. I know I'm a one-trick pony. We've been talking the same talk for so long now, but it is what it is. You know, keep turning up, and we see what gives. Thank you to everyone who's liked and subscribed to the YouTube. Obviously, I'm trying to do more of my business through YouTube, because social media seems to be as dead as it's ever been. And yeah, happy days. Cheers.